investing in Europe. We're here at TechCrunch Disrupt London. I'm joined by Sonali De Rycker, who is one of the people leading Accel's London office. And they just had some big exits there. And she can tell us a little bit more about what they're looking at. They invested in Spotify and Wallapop, which is like the European Craigslist. So you invest in some consumer companies. What kind of companies do you look for in making investments?
You know, we're in the same, we've been in Europe now, in London, from London for about 15 years. And really we're in the same business as our Palo Alto colleagues. So we're looking at exactly the same mandate of backing great entrepreneurs who want to build category-leading global businesses. So marketplace has been a very fertile sector for Europe in general. And I can talk about why enterprise B2B businesses, the entire infrastructure is evolving, and there's some really great new businesses that have been built on the back of that.
And you invest in Deliveroo, I understand, speaking of marketplaces, which is sort of like a European Grubhub, competes with Postmates a little bit. So are you guys looking at more delivery services, or what is it about Deliveroo that really has stood out in Europe? They just raised a big round, I understand.
Great question, Katie. I think what's really interesting about Europe is that marketplace businesses are all about getting local consumers to change behavior. And what we've seen is that once you build a business that's actually relevant in Barcelona and in Paris and in Madrid and in across Stockholm, these entrepreneurs have actually figured out a playbook that allows them to expand globally by targeting very hyperlocal, very urban, dense cities. And so we've seen a number of businesses that have used that playbook. Wallapop is one of them, Deliveroo is one of them. So really the theme for us is consumer marketplaces. And this really favors European entrepreneurs because it's not easy to expand to new countries from a standing start. So Deliveroo, for example, I think at the beginning of this year, until the beginning of this year was only in London for the last 2 years. Now it's in 52 cities across 3 continents. So it's really the theme around consumer marketplaces, especially around the city-centric approach where Europe really has an advantage.
And there are pretty high valuations in the United States. Boston at Postmates was just talking about that on stage earlier. I mean, do you feel in Europe that some things are overvalued, or what do you guys think about bubble talk that everyone's been talking about these days?
Sure. Look, capital markets are global, and frankly, venture markets are completely global too. So, you know, the dramatic acceleration that we've seen in the US in terms of late-stage capital, it's been exactly the same in Europe. I think I counted that there've been, just in our portfolio alone, there've been 75 million plus financings just in the last year. That's more than we've seen in previous years combined. So, you know, we're suffering from exactly the same, or we're experiencing the exact same dynamics of a lot of public investors. They're looking for a return, they're looking for a yield. It's a zero interest rate environment, at least it was a zero interest rate environment, and technology really has the returns that many other sectors don't have. So the phenomena in terms of how we've seen non-traditional, some call them tourist investors, investing in private companies, we're experiencing exactly the same thing in Europe. It's just at a smaller scale because Europe is a less dense market, but the numbers and the shifts are the same.
How are the IPO markets in Europe? Because that, of course, plays a role in valuations. There were some companies in the US that struggled after they went public, and so that spooked some VCs about their late-stage companies. How are things looking here?
So, you know, the IPO markets, there are a few IPO markets. There's the German market, there's the Paris Exchange, Euronext. We just took a company called Showroom Privé, a French fashion group, public. Very successfully there, and there's the London Stock Exchange. And I think that similarly, I would say the markets in Europe, the IPO window is probably slightly less open than what we're experiencing in the US. But again, the capital markets are fungible, the investors are global, and you know, the reality is that many of these great businesses, when they come to the market for an IPO, they need to build a book. When you do a late-stage private financing, you need one investor. Sometimes you need 2 investors. For an IPO, you need to build a book of multiple investors where demand and supply have to meet. So in general, I think the dynamics that are sort of circling around IPOs in the US are also impacting Europe. It's just that, again, it's a younger cohort in Europe. I think it's all going to play out as we see. So far, the European markets have been pretty stable and solid in terms of the companies that have gone public, probably slightly less volatile than the US, but I think this movie is still being played out. But we're excited about the companies that are being built here.
And when you're making an investment decision, besides just the business model, what other things do you look at when you're evaluating which companies you might invest in?
So I think that it's an interesting angle given what we just discussed. We used to look at whether they can be number one, right, on a global scale. And we still look at that. Of course, we look at the team. The one thing we never used to worry as much about, and I think this is topical, which is why I mentioned it, Katie, was how much money does the business require? Because it never used to be about raising large amounts. And it never used to be that there were 5 to 10 venture-backed companies going after the same space, raising large amounts. I think what's changed is that capital efficiency has sort of been thrown out of the window in the last couple of years. And we would love to see the capital efficient models come back. So this is sort of something that we used to focus on a long time ago, but it wasn't as relevant, and now it's become a lot more relevant. We worry if there are a number of competitors that are being backed by venture capital in exactly the same space. So competition and capital efficiency and how the two are intertwined have sort of become main stage for us recently. It never used to be the top two thing. I mean, of course, it's the team and the market size, but capital efficiency, I think I would love to have it back.
So maybe a greater emphasis on profitability, some better metrics there.
I think we look at unit economics. The most important thing is in the core geographies that you're in, do the unit economics work? And then you can expand and you can understand the playbook once you do that. So profitability, at some point, sure. We do have a lot of profitable companies and we love it when we get there, but not at the expense of growth, right? We're in the
Margins
tech business.
Per
yeah,
item.
It's really about contribution margin, it's about payback times. It used to be that you wanted a payback time of less than 12 months. I can't tell you how many companies come in and say, oh, our 5-year lifetime value is going to be great. 5-year lifetime value? I want to go back to the days where we looked at 12-month payback, 1-year lifetime values.
Okay, so an emphasis on the shorter term for sure, it sounds
like. Not so short, it's a year, but unit economics working.
All right, well, sounds good. We have to wrap, but thank you, Sonali.
Thank you, Katie.
It's great having you here at London Disrupt. And stay tuned, we have some more stuff today.
Great.
It's going to be on stage.
Thank you, Katie.
Thanks.